think stablecoins are the first use case that stand up to the promise of democratization of financial services and like bringing financial services also to, let's say, emerging markets in Latin America, for instance, that face a lot of inflation pressure, and that people are actually flying to a safe haven, which is not the USD, but which are stablecoins effectively.
Season 1 of Stableminded is brought to you by Layer1, powered by BVNK. BVNK has been at the forefront of stablecoin payments for years, and Layer1 is their latest innovation. Designed for businesses ready to harness the power of stablecoins, Layer1 is self-custodial, global, and takes the hassle out of managing payments across multiple chains. It's the same technology BVNK uses to run their own operations that they've been developing in-house for years. We sit down with Johannes Kaske, Managing Director of Layer1, to talk more about it. All right, Johannes, thank you so much for joining. How are we doing?
Thanks for having me. Excited to be in the show. I'm great. How are you?
I'm doing awesome. First off, thank you for BVNK just for the support for this first season. Really excited to have you guys come on and power the show in the early phases of our journey. And when Emma from your team originally heard about what we were trying to do, she was just really excited and bought in. So it's awesome that you guys can be the founding sponsor of this, and excited to dive into Layer1 today with you.
Absolutely.
So let's start with intros. Give us your name, your role at Layer1, and then we can dive into some history of how you got there.
Absolutely. So I'm Johannes Kaske. I'm the managing director for Layer1, which is a new product that BVNK just recently launched. BVNK itself is a global PSP serving basically both fiat and cryptocurrency payment use cases across the globe. I joined the team this summer. So before that, I was spending a lot of years in, let's say, custody wallet infrastructure, as I was working for a wallet infrastructure provider, and saw a lot of, let's say, use cases trying to be implemented, and now basically really focus on the payment with Layer1. Basically what the last couple of years have been, and what I found at BVNK and Layer1, and to see how we can power the next phase of, I would say, stablecoin adoption we see in the market. We're seeing a lot of traction, a lot of hype, a lot of attention to stablecoins as a killer use case, or as the Stripe founder put it, the room temperature superconductor for financial services.
Room temperature superconductor for financial services. That's a new one. I like that.
Have you seen that? Like, I think it was a Stripe founder on X at some point.
That's awesome. Yeah, there's a lot to talk about here. So when I think about Layer1, it does seem like an interesting culmination of your background, but also BVNK's background in just your personal work history and interest, but the company's journey of building a lot of the stuff within their own tech stack. Maybe for you personally to start, give us sort of the journey of how you got to where you are and experiencing the problem that I think Layer1 solves.
Yeah. Let me take the bigger swings. I started in the DLT and blockchain market back in 2018. So my original background is from the business side or more from the entrepreneurial side. And made this conscious decision to move into DLT back in 2018. A PhD, actually. I started with a PhD to basically dive into the rabbit hole of these DLT and how it could be applied in the variety of use cases out there. And then over a couple of, let's say, stations throughout the way, I ended up at a company called Metaco. Metaco was a Swiss-based wallet infrastructure provider that was very early on in the wallet infrastructure game back in, I would say, 2020, when there were the first regulatory frameworks were coming up in Europe, like Germany, Singapore had a framework. And it was this first phase of adoption when banks in particular looked at implementing wallet infrastructure or blockchain infrastructure into their core processes. But it seemed there wasn't so much of this killer use case that stablecoins are today. So there was a lot of try and error, a lot of exploration. And that's what basically I did for almost 4 years. But after 2 years, so I was leading sales and then technical sales and the solutions team that basically help our customers to really implement those use cases on top of the infrastructure and basically solve all the problems that you run into when you start processing crypto payments or stablecoin payments at scale. And then at some point 2 years ago, Ripple actually came along and acquired Metaco as part of an M&A deal. And then for the last 2 years, I was basically leading then the custody product, which is now, so Metaco is now called Ripple Custody on the product side for Ripple, and decided this summer to then make the move to join BVNK to take the next step here.
So you started you said DLT, just distributed ledger technology. For those who may not be aware, you got a PhD in DLT?
No. Disclaimer, like I started with a PhD, but and that basically allowed me to make it my full-time job just to read into that stuff. But like
Okay.
I didn't finish the PhD.
Okay. So there was
it was broke at some point because it was an external PhD and I didn't have a job at the university, so I needed to make a move to make my living here.
Okay, cool. I was like, that's a really cool PhD.
I mean, like, I don't want to dive too much into that rabbit hole, but like, it is really challenging if you want to have a technology view from an academic point of view. Like trying to squeeze technology into theory is a very challenging and cumbersome challenge. And blockchain is not a new theory. Blockchain is a new technology that is just applied in different contexts. So
yeah, you were really drawn to that, the technology itself, and led you to Metaco and everything that happened there. You were, it sounds like, on the really the sales and implementation, leading the dealing with and working with the customers who were buying this type of technology, mostly banks, it sounds like. What was the core use case that those banks were wanting to use? Sounds like custody, the platform for. What year range was this, and what were they really using Metaco for at that time?
So it was, but like when I joined the company, it was 2020. It just had basically traction with the first clients, and the main use cases were really around institutional custody. So enabling banks to custody, thus hold and control Bitcoin or ETH primarily for their institutional clients. There's some basically investors and asset managers who were trying to basically add this piece of Bitcoin or ETH to the investment mix. And that's basically was the main use case. So it was really about low frequency of payments, high volume, basically just receive and store and make it very, very safe and secure. Because people were not touching those funds a lot because it didn't have the use cases. More like this buy and hold, more of an investment type of use case that I saw most. And then basically throughout, I would say 2022, you had a lot of explorations with a lot of variety of clients. It was like working on NFT auctions while I was working on payment use cases with another client, and then very basic custody use cases for others. So like I think like this last 4 years, we're still like sort of this exploration phase across all industries primarily. But what has kind of become, let's say, or crystallized as the use case is stablecoins, as payments.
Yeah. What do you think about that, and maybe transitioning a bit into the BVNK side of your chapter and where you are now? From everything, from your vantage point, you've been in this space for a long time. You've been selling distributed ledger technology related services to some of the biggest institutions on the planet. What is it about, in your view, stablecoins that is resulting in this type of moment that we're seeing right now? What are they unlocking for institutions that is making this conversation so top of mind, in your opinion?
Well, in my opinion, it's stablecoin are truly enablers for, let's say, global services. And I think stablecoins are the first use case that stand up to the promise of democratization of financial services and like bringing financial services also to, let's say, emerging markets and other markets that face issues here. And we've seen, I think that have been the major drivers. We've seen markets in Latin America, for instance, that face a lot of inflation pressure, and that people are actually flying to a safe haven, which is not the USD, but which are stablecoins effectively. And the more we see on-ramps and off-ramps, so like the interfaces to stablecoins being more and more frictionless, I think the more and more of the actual payment activity will happen on-chain. And I think people have realized that. And on part of that, I think what's the most important piece is it's an end-to-end use case that really solves real-world problems for many people. And at the same time, you have the clear enough regulatory framework that facilitates basically enterprises or like companies and PSPs at a larger scale to basically support those use cases. So I think that those two things coinciding at this, let's say, point in time where we see also, let's say, different law regulations accelerating potentially in the US and looking at stablecoins from a global scale. So I think there's been a lot of work being done also on the framework side, on the reg side, and all of that now comes together as in 2025 will be a super exciting year for the industry.
Yeah, I want to dive into the technical side of Layer1, but just on the point of regulatory clarity, I think that's a really important one to put into context in this conversation, because you're right. It does feel like we're finally getting to a point where there's enough of a rule book coming or in existence that gives some of the largest enterprises in the world safety and comfort knowing that they can play by the rules if they do use this stuff, which historically for the companies that you may have been onboarding at Metaco, or I was onboarding at Coinbase, like during that sort of early 2020, 2021 season, a lot of those companies were taking a calculated risk or educated bet around this idea of there not being that clarity yet. But I do think that we're about to see that change, or we are seeing that change. So when you see that, when you say that's coming, or there's rule books and frameworks there currently, what does that actually mean? What are the frameworks that you think of, or the kind of leading government-backed frameworks that are coming out that you're pointing to on your side?
Yeah, I think like if you compare it back to 2020 and beyond, is like when we worked with, like when I worked with those customers on preparing the license application, whether that's with a local regulator or whether that's then also potentially in the context of MiCA as in a European framework, is that the regulator just didn't have the experience of basically handling those applications. They were just presented this new reality of technology, and so and people were just like asking the regulator, "What do I need to do?" And they were like, "This, I don't know, what is this, right?" And I think what has happened in the meantime is like that the people have actually taken the risk, have basically, instead of asking the regulator, what do you need to do there? So like, okay, we have taken the risk. This is our risk-based approach. This is what we have implemented on the AML side. This is what we have implemented on sanction screenings. This is what we have implemented on the OFAC compliance. This is how we do our checks and balances. This is how all these kinds of stuff that you need to think about, basically to make sure you are properly safeguarding your customers' assets. We have basically all of those best practices have basically flowed into the frameworks, in my opinion. So the regulator understands the technology now as he has seen it in practice, and now it's a completely different start, because you have sort of this tick box, and then you I need to make sure this is supported, and make sure this is supported. Segregation of customer assets versus operational assets. And that's the kind of stuff that basically the entire industry has learned, but also the regulators. And now I think it's much easier to, based on the infrastructure and the technology out there, to implement very compliant services that can fast track this go-to-market and this adoption then.
Yep. And BVNK, in my mind, has always been a very regulation-first, regulation-friendly brand in business. You guys, I'm imagining, have done some very foundational work in a lot of the things you just said. And when I think about a massive barrier to entry for an institution or customer that's wanting to use something like Layer1, historically, that has been having to deal with all of those complexities. Can you maybe transitioning this a bit into Layer1 specifically and BVNK and the journey of that, whether in the context of regulation or not? Would love to know more about how you see just the toil and the journey of BVNK in recent years in this conversation, and just what that's been like for the brand. I know you said you've been there not super long yet, but I think that's important context for those who might just now be getting to know BVNK.
Yeah, like if you think about what BVNK's vision is or goal is, it's to seamlessly bridge the world of banking and blockchain. And that we decided to go on that journey more than 4 years ago to make it really reduce that barrier to adoption and to really make it blockchain and stablecoin enterprise grade, as in it's ready to use. And what was very clear early on was, as I mentioned, it was basically having a local, or not only a local, a global licensing framework, so you can basically abstract all the complexity and offer that payment services to your clients. And for that you need to basically look at what type of services you offer, whether it's crypto only, and then you look, for instance, at different licensing regimes, that if you also touch the fiat piece of it when it comes to either on-ramping to crypto or off-ramping from crypto. And then when it also then becomes to orchestrating the actual fiat payments, as in basically making the bank transfer itself also from the same platform. For that, you need a variety of licenses across the globe. And there is not like this global licensing framework. So this is something we very early on invested on to build a team, to build a compliance team, to make sure we have a framework that covers basically a global scale for the main currencies that we see in fiat, which are the US dollar, the euro, and the British pound. And that's basically the main journey that BVNK took from the licensing side. And then obviously, if you want to process also the fiat leg of the payments, you will need to think about proper banking network, as in a network of banking partners that effectively are banking the end customer of BVNK, and that then can basically plugged into our fiat processing engine. And obviously, what we see here is we've seen pressure in the market, especially to the ones banking the let's say crypto-friendly companies. Like, it wasn't like, let's say, the most crypto-friendly banking environment, particularly in the US. So you needed to think about how can I build a banking network that's also robust, as in, like, if this bank does need to discontinue their services, do I have a fallback option, and basically build that global bank network. And then the third piece of it is really then the crypto infrastructure. And I think, like any other PSP or payment related company in the market, when we started pretty much 4 years ago, the journey is pretty similar. So you start like, how do I get access to the blockchain? So how do I manage wallets? How do I can create accounts on the blockchain? How can I get access to nodes? And then you start doing your first tests with Bitcoin and ETH, and then maybe USDC or USDT. But then very fast, you start running into scaling problems, as you basically just need more networks, more tokens, and then you would naturally use basically third-party providers for that, like wallet infrastructure providers, and then start building basically on top of those wallets. And that's what we've seen in the entire market. Some companies have started in-house and have built everything in-house. Some companies have started in-house and then have outsourced. And we have been pretty much on that same journey. And what you need to do to basically make wallets work for payments is a lot of specifics when it comes to blockchain management. And it is basically processing payments at scale, accepting payments at scale, mapping them to the customers you serve, and then going into the really nitty-gritty details of blockchain management, like how do you manage all the gas for the transaction fees on the blockchain? How do you reconcile? How do you balance? Like, yeah, in a nutshell, how do you make blockchain and wallets work for payments? And that's what BVNK has been doing over the last 4 years.
So give us when you think about blockchains, payments, banking, how all of this comes together, this really seems like layer one seems like the culmination of a lot of the learnings along the journey of how you can bring a variety of things on chain that you've been building to life in a single package for an institution. For an institution or a business that is looking at layer one for maybe the first time, and they're building a payment solution, a stablecoin payment solution. What do you typically start with when you're speaking to them? What are the ways in which you communicate about this product at a high level? And then I'd love to dive deeper into the specific things on the technical side that you find really interesting about it. But what do you typically start with when you're having these conversations with customers or prospects?
The most important thing to start with is to understand what's the use case and what's the goal of the customer, right? And I mean, particular thing about layer one, it's an infrastructure solution. So it's basically the product of refactoring all of the building blocks that BVNK needed to build a regulated payment services, leveraging all of the potentials of the blockchain, but understanding that using layer one as an infrastructure only solution is basically a step that is sort of the next step you would take after partnering with someone like BVNK or other regulated service providers. So if you think about, let's say, the typical customer journey that someone in payments would have, is you start as a startup, you think about a use case, and then you need to identify what are the requirements I have on the technical side, on the legal side, on the compliance side to meet that use case. And what you normally see, especially in early stage, let's say, ventures that have identified a use case, is they're not, in most of the cases, they're not licensed entities. They're not the ones that basically, they are just very early on in their journey. They might be aware, okay, I will need a custodial license for the crypto services or for the payment services at some point. So I want to insource this technology piece. So like, this is the first very important differentiation you need to make is, okay, this is the next step, as in you will be basically managing blockchain keys and blockchain wallets on your own. Right. And that comes along with a lot of, let's say, responsibilities, because you need to come up with a way of, okay, once I manage those keys and wallets and transactions on the blockchain myself, how do I basically make this on behalf of my customers, as I will be actually becoming the service provider for them. So I need to make sure I have proper safeguarding in there. I need to make sure, how can I give my customers a deposit address if they want to deposit a stablecoin or another crypto asset. how do I make sure in my system, like once I receive these deposits on my blockchain, that I map this to the right user? So Drew, if you like deposit on this blockchain address, there's nothing like a payment reference on the blockchain. So like you don't have this reference data. So as a PSP, you need to come up with a logic. Okay, how do I efficiently map those deposits to the right users while still minimizing the transaction fees I pay on the blockchain? So like segregation versus consolidation. That's the first piece. And then like understanding, okay, how can I create sort of a service on top of wallets? And then once you understood that managing keys on behalf of someone else is like a custodial activity, it comes with some requirements on the regulatory side. So you need to make sure that you did the proper checks and balances, screening transactions that are coming in for anti-money laundering, or screening them for sanctioned addresses that are on the OFAC list. And that kind of stuff is something you need to really think about. So what's my compliance model? So like, how do I treat those transactions? But then where do I get this data from? And then for this, you have different specialized service providers that will give you that on-chain data to understand the risk associated and do that AML screening. How do I embed them in my payment processes? So like, how can I make sure that every payment in is actually properly screened, and then there's some logic in there and some governance around that you can avoid that tainted funds or funds that come from sanctioned addresses are ever entering the system. And these are a lot of challenges that come up, and the more you dive into them, the more you understand blockchains are not native payment platforms.
Absolutely not. It's been really interesting seeing the last few years of companies who've tried to build in this space, like you're saying, these startups, and their core business might be completely, really, their core differentiator might be completely separate from everything that you just mentioned. It would be ridiculous to, think about it in the traditional sense where like I'm trying to open a restaurant and I'm just trying to be an incredible Italian restaurant. And I have to go figure out how to build my payment point of sale system and my customer's banking system and go worry about custody. And it's like, that's totally different than making a spaghetti and meatball sandwich. And I think a lot of companies who've tried to innovate in the space have inherently had to be really innovative on the infrastructure side because a lot of this hasn't existed before. But it sounds like Layer 1 and what you're saying can be this like, hey, we'll take care of all of that for you. And you can just focus on making pizzas and meatball sandwiches and do what you do best. What are the things when you think about the most difficult technical unlocks? Regulatory stuff is huge. Having a company like BVNK be sitting in that position and having those licenses. But that's one thing. What from a technical side do you find more of the most compelling challenges that you guys have solved for that are, in some ways out of the box if you were to use Layer 1?
I think it's rather on the operational side than on the technical side. I would say like innovation on the technical side, we've seen the major models evolve in the market when it comes to key management, whether that's hardware-based or software-based, whether that's the technology supporting that, or whether that's on Amazon or Google and other cloud providers. So like we've seen sort of this best practices emerge when it comes to the technology piece. And I think that my main goal or my main value proposition is to really abstract all of that choices and not think about the technical side, but rather think about the operational side. So how we can make things easier in implementing, but then also running such a platform. And that is, how do operators work on such a platform? Is it the treasury team or is it the trading team? And that's kind of the pieces that I want to focus on, and I will keep focusing on, is really abstracting the technology to a degree that there's a platform giving you just the main payment flows you care about, whether that's crypto or fiat based. And then under the hood, abstracting the technology. Also, I think the major piece that went into Layer 1 is looking at running this at scale and let's say scaling the BVNK business. We just looked at every single process and operations and asked ourselves, can we automate this? So like, is it really like this is a manual process that repeats itself and it happens, I don't know, every day or twice a day or every week. Like, so anytime there's a process that keeps repeating itself, we thought about how can we automate this? And how can we make the lives of the operators of such a platform easier? And that's
what were some of the things that came up that needed to be automated? I'm curious.
The main things we saw in automation is managing liquidity for collecting payments across all of those various wallets that you created for your users, and then making sure you properly pool those funds. Because at the end of the day, once you are a PSP, you have SLAs to also support any type of payout. So what you want to do is you want to collect payments, you want to efficiently pool them, into not hundreds of wallets, but actually a single or a couple of wallets. So basically manage liquidity very efficiently. So you reduce the number of manual transactions you need to rebalance between a deposit wallet and a payout wallet and an omnibus wallet, and then potentially an exchange account where you have some balances. Like all of this payment collection and then efficient pooling, that is a very, very cumbersome process that I've seen many companies trying to implement it, whether that's on the banking side or on the payment side. And then the most critical challenge with that is actually managing the blockchain and managing the fees associated with blockchain, right? And that is stuff like commonly referred to as gas. So basically, if you want to move stable coins in the blockchain, you still need to pay that little fee to the blockchain itself to pay for the settlement of the transaction. And if you want to really think about stablecoins and digital assets in a more holistic way, is you want to abstract all of that, all of the networks that are supported. So like you don't want to, like, at the end of the day, you don't care whether a stablecoin is on Ethereum or on Polygon or on Solana or on Tron. What you care about at the end of the day is the value you want to move. And basically making sure that all of these processes, paying for the fees, making it very efficient, pooling those, that went into layer one. And that really, I think, is what makes it super interesting, especially for people that looking at stablecoins with a fresh view and looking at blockchain with a fresh view and think about how can we use this for payments. I think a lot of the pain points that went in on our side have gone into the product. And yeah, it comes with defaults, it comes with automations. You still can jump into the rabbit hole and start configuring stuff and making it a little bit more efficient to your specific use case. But it gives you a head start, it gives you a good start, and then you can really focus on owning your customers, owning your own user experience, and basically abstracting all of the technical complexity to this platform.
Yeah. So you talked a little bit about gas fees and just fee optimization there. It reminded me, you came out, for those who haven't seen this yet, you came out with part one of how many parts of this blog are you coming out with? How many should we be expecting?
So like for this particular one, there will be a last one, I think, then early next year.
Okay, so part one of two.
Giving some preview of what's coming up next year.
Okay, so part one of two is out. You came out with this late last week. You know, you went into this on this blog about asset pools. Kind of reminds me of what you were just saying. Could you talk a little bit about a fee optimization with asset pools and how you guys think about solving that specifically?
Yeah. I mean, one thing that I personally have seen also prior to being at the BVNK and Layer 1 is that what I've seen in the market being the most, I would say, efficient target operating model when processing crypto at scale, which has been applied by major players in the industry like exchanges or OTC desks or custodians even, is sort of a accounting model where you would not directly have a one-to-one mapping of a blockchain address to a customer. So because what you're trying to do is reduce using the blockchain as much as possible when you create basically a use case at scale. Because the blockchain itself, it's made for settlement, but it's not very fast and it's not very cost efficient to basically settle a lot of small scale transactions. Blockchains really make a lot of sense when you have a lot of volume, and then the transaction fees get very, very marginal. But basically, if you have low volumes and higher frequency, what we see is like the de facto target operating model in the market is something called omnibus accounting. So you would not have that direct one-to-one mapping between a wallet and a customer, but actually just use wallets for basically identifying and mapping user deposits, but not basically, and then swiping those deposits into commonly owned, if you want to have it that way. Like, I don't want to go into this whole who owns what and compliance stuff, but like basically a pool of assets that can be used by the operators and by the system for any type of payout. So think about basically you have someone pays in $100, and then he does some other activity on the platform by sending like, I want to send this, like you and I, Drew, we are customers of the same PSP. Now, I want to send 100 USDT to you. We could use the blockchain, but that will come with a lot of fees and would be not that fast and would be not instant. If we two are the same customers, the PSP could just basically not settle on the blockchain, but just like update the balances. So you can do a lot of basically netting and reconciliation, not on the blockchain, but off chain. and then just use basically the blockchain to settle most efficiently.
It's a really powerful thing, at least for, I think, a lot of US listeners who might have experienced with apps like Cash App and Venmo and these Coinbase, even these walled garden payment networks, if you will, where that exact flow is happening. Some of the most, in my opinion, frictionless payment experiences take that shape. So what you're saying is using the rails of layer one, you can actually avoid forcing payments every single time to be settled on chain, which for those who are aware come with, speed and cost downsides. You can actually have a pretty efficient ledgering system where, especially if the two people exist on the same network, that settlement can be near instant and in some ways just ledgered off chain, if you will.
Like that off-chain ledger logic doesn't come with the product, but what layer one does, it really facilitates building that logic on top of layer one. So because you have less restrictions on how to group or combine wallets in layer one, it gives you a lot more flexibility when designing those cases. It doesn't mean that it is your use case, right? This is, let's say, the most efficient one, and that many customers have, like players have adopted that. Think about it, like when you go to your Coinbase or your Kraken account or whatever it is, and you ask for a deposit address, that address won't be the same address sending out something if you want to withdraw to your MetaMask or something. And that's exactly the same principle that is applied in the backend. So it's not that one-to-one mapping. You have a unique deposit address, so everyone knows, okay, you just made that deposit, so your wallet is balanced. Like when you withdraw, it's coming from another asset pool. So layer one really facilitates setting up such frameworks, but it also gives you the flexibility to say, like, for whatever reason, it might be a compliance reason, or it might be your risk appetite or your asset segregation needs, especially if you look like new frameworks coming up like Mika in Europe, where you want to have a clear segregation between customer funds and operational funds. Then this notion of asset pools gives you a lot of flexibility and basically logically combining blockchain addresses. And there's no, let's say, logical layer in between that would have some embedded logic already.
Understood. So I know we're coming up on time here a little bit. So we've talked about the go-to-market a little bit, and you are tasked with speaking with a lot of these prospects and companies that are interested in using layer one. What use cases do you get most excited about? Like when a customer fills out an interest form or wants to, talk to you, what type of companies do you really think right now in the short term layer one is really, really great for?
Yeah. So we're seeing a lot of traction and interest, particularly in the PSP space, whether that's existing players that want to add stablecoin to their payment mix, whether that's existing players that already have stablecoins in their payment mix but want to fast track their business, or whether that's new entrants like starting with a clean plate and want to start processing crypto and stables at scale. That's like these customers are like the ones where we see the greatest fit, because it can really accelerate the time to market, accelerate the time to value, as they can benefit most from what's built in the platform. Like what excites me personally about use cases is on stablecoins is really this global payment use case. You might have heard of the term the stablecoin sandwich. Basically, that's cross-border payment use case where you start with a local currency and then you end with a local currency in the whatever market you want to send to, whether that's from US to South African rand or whether that's from euro to Latin American currency. And one of the main use cases, or one of the main ways how to implement this, let's say this end-to-end flow of borderless payments, is the stablecoin sandwich. So what happens is you take a local currency, you buy a stablecoin, you send that stablecoin across the border to a partner that basically then converts it into the local currency and then does the last mile payout. And that kind of use case, I think, is the one that drives most interest, not only in the market, but also with the companies I'm speaking to. And that's the use case I want to support further going down into 20. So looking at the entire piece of crypto and fiat and how we can actually make it work for those global use cases.
Yeah. BVNK seems to be in a really unique position in all sides of that sandwich, where like you on the fiat side have had ample experience on both of the pieces of bread in the sandwich, but in the middle, the technical side of doing everything that you've talked about with stablecoins is really there, because for the institutions that you guys have been serving, you've had to figure that out. On the, the fiat on side and fiat off side, we've been speaking to some companies on the podcast and just in the space that are really thinking deeply about that. Is that an area of the business that you all are wanting to own end to end, or do you find yourselves partnering with like local partners for last mile things in the short term?
Like I can speak about BVNK obviously, but I can speak about like the way I see Layer1. Like the thing is, fiat itself, it's still a very highly sensitive, regulated activity. So like when it comes to the fiat side and handling fiat, this is something where licenses and compliance and all of that stuff matters. And that's obviously where BVNK is strong and where BVNK will double down on that. What I want to look at from a Layer1 point of view is obviously, yes, there is this strong partner, BVNK, if you want to put it that way, that can cover that piece also for Layer1 customers. But I think that the future is a one where there's not like a single global fiat payment provider, but there will be a couple ones. So like, I think there will be a couple of global providers, but then there will obviously be a couple of local champs and local providers. And we see those already being champs in those markets. If you look at the likes of like Aquanow in Africa or StraightZax in APAC or Bitso in LATAM, I think we'll have these strong local players that then and will plug into sort of a global network that I want to orchestrate with Layer1.
Makes sense. Well, this has been great. Any sort of PSPs seems like the really top of mind use case here. Do you think that the reason that might be the case is just the inherent complexity of that business? Just to do what a PSP has to do is inherently just technically very complex, especially on a global scale, like technically on an operational scale, but on a regulatory scale, also very complex on that front. It seems like a PSP has both pain points uniquely.
Yeah, absolutely. And that's what we wanna solve at BVNK at the end of the day. Actually having not only a product, but also being a partner across the entirety of the customer journey. So like recs and compliance and license applications take a lot of time, especially even if you're like fast tracking everything. But like starting today, if you want to get a license and start operating and be in the flow of customer funds to really own the user experience for your customers, that takes some time. And that is something you need to consider. So like it might be the better choice to start with a regulated partner like BVNK from get-go, and then at the same time or in parallel, or once you are getting closer to basically getting your licenses or getting your setup or your target operating model nailed down, to start implementing that on Layer1, as your future vision might actually be not to outsource the entire thing to a partner like BVNK, but actually own and control parts of the flow, so you can basically own your use case and own your user experience.
It seems like a big year for you guys, 2025. I feel like in a year from now, Q4, end of 2025, when you think about what success means, it's like if 2025 was really successful, this is what it'll feel like. Like, what would you be saying a year from now in relation to Layer1 and your work there? What are some things that you're hoping to achieve by then?
Yeah, so like today we are in kind of hypercharging for 2025. We're live with 2 clients in beta, and we're very, very busy prepping to launch our SaaS version of the product to really basically further reduce friction for the clients, which makes it more cost effective, easier to onboard, easier to go live, and faster to go live with. That will be a big milestone coming up in Q1 next year.
And that means just essentially, instead of like an API technical toolkit, you'll get more of a dashboard software experience. Is that what you mean by that?
It's basically we abstract and take care of much more stuff and the heavy lifting when it comes to infrastructure. Because like when you manage infrastructure, if you don't have a SaaS product, you need to think about, okay, what are my nodes to connect to the blockchain? How do I monitor the system? How do I make sure it's always up and running? And that comes with hosting costs, and it comes with maintenance costs. And obviously, we want to bring that down as well. And obviously, SaaS is nothing new. It's a market standard. So it will be then with our launch for the SaaS, we're going to basically be ready for alpha. And then for me, it's about meeting what is a successful year. Obviously, 2025 will be a year of scale. The entire industry will, in my opinion, hyperscale when it comes to volumes, when it comes to new use cases implemented, new enterprises entering the space and adopting. So I think what a successful year would see having, first of all, more and more conversations with people out there that want to build and want to basically implement those use cases and go to market as soon as possible. And then with those, really, make things happen. But it will be a successful year will be about scaling, about adding as many clients as possible, while still keeping sanity of everything and standing true to the enterprise SLAs and standard we want to bring to the market. And then really see, I think, apart from scale, for me, 2025 will be successful if we see more enterprise adoption. So like if stablecoins itself, and hopefully with the help of Layer1, enter the main stage, as in we really have then companies and enterprise customers that start building on stablecoins, which are not PSPs or crypto native companies or payment companies, but actually see true enterprise adoption. So if we mix all of that on and can make sure we keep saying of that and everyone keeps healthy, then I think it will be an amazing year.
Yeah, I hope so. When, just real quick, PSP versus enterprise, what the differences in your mind between them? What would an enterprise be using Layer1 for differently than maybe a PSP would functionally?
I just spoke about, let's say, more the entirety of BVNK and Layer1. So a PSP to me is a perfect customer and partner for Layer1, as these are payment specific companies. But like when I added this enterprise adoption, this was less Layer1 specific, but more like enterprise customers, as in being not payment specific companies, like people that are not becoming a regulated service provider in payments, but actually people that are solving real world use cases, such as stablecoin payouts for contractors, a use case that BVNK supported with Deal and others. That I think if you see more and more of those across the industry, I think it will be a successful year for everyone.
Do you see unique synergies that could happen or will happen, maybe are happening for the PSPs who use Layer1 with maybe the enterprise on the BVNK side who also are partners there? Like, in your mind, do you see, speaking back to that network or walled garden effect, do you find that is a moat that you guys are building that would come with unique benefits longer term?
Absolutely. I mean, I think that's a longer term vision where really the service, the whole service spectrum of BVNK, both from the regulated BVNK side and the unregulated Layer1 side, flowing together. And obviously, if you're building a platform, you're trying to create network effects. And the more people that come onto the platform, the more basically, in the end, I think we can make the lives of users easier, as in funding a trade, settling a trade when you need to convert, or basically moving funds.
And we, last thing, we got part two of this. Part two of a few blogs that have come out. What should we expect with this next blog that you're coming out? You mentioned you're going to be coming out with some things around the conversion of stablecoins and fiat. Exactly. Any things that you can tease there?
Yeah, today we spoke a little bit about, or teased a little bit, some of the, let's say, crypto and crypto processing, what's payment specific about that, stuff like the gas management and the fee management and the way you account for that. And then the next piece will really be about, okay, how do you, like, all of this, like in the first part, it assumes you have crypto coming in and going out, right? But like when you think about on-ramping and off-ramping, you need to convert from some existing fiat currency into the stablecoin and vice versa. And that's what you need basically to support payment case. We'll look into this second big block that went into the refactoring exercise of BVNK, and that's part of Layer1, which is the trading engine. And the trading engine effectively lets you plug in your liquidity providers like exchanges or OTC desks and others, and then move liquidity between those and your Layer1 wallets at one time, but also then use Layer1 to basically manage those conversions. So those hops from fiat into crypto or crypto into fiat, or as part of a fiat to fiat flow, potentially fiat to crypto, crypto to crypto, crypto to fiat, and so on. So that's some of the features. I will have a look into that, and then also give sort of a sneak preview on where my head is for next year, and where Layer1's roadmap will be influenced by is that's really that stablecoin sandwich use case that we briefly touched upon.
Awesome. Well, this was really fun. Thank you for the time. Any final thoughts before we go to leave the listeners with?
Any final thoughts? I think 2025 is all about building, about driving adoption by actually innovating and driving adoption by user experience. So like anyone's out there that wants to build on stablecoin, make sure to reach out and discuss your use case. I'll be happy to make it happen.
Awesome. Thank you, sir. This was fun. We'll do it again.
Thank you so much, Drew. Happy to do it. Take care, man. Bye.